Welcome back to Diamond's Edge Live. Greg Diamond here. And this week we're going to talk about why I believe the trade war is over. We're going to look at NVIDIA stocks, which reports earnings later today. And we're going to look at some other setups that is basically we've been tracking for a while. Kind of go back in history and look at what could have gone wrong and why I think what happened over the last few days is imperative to why I believe the trade war is over. Just a quick note before I get started. Going forward, so starting next week, we're going to start the show at 8:45 a.m. Give you a little more actionable advice before the market opens. We'll go from 8:45 to 9:15, call it. Give you another update on that, in the week ahead. But 8:45 a.m. going forward. Okay. So let me share my screen here, and what I'm going to start with is the let's start with NVIDIA first. Actually, let's start with the S&P 500. All right. So the trade war is over. Where am I coming up with this? All right. We are looking at this May 15th or mid-May time frame as a possible top. Now, when you're dealing with time factors, when you're dealing with time cycles, sometimes they're big, sometimes they're not. Sometimes they're just a bump in the road. Okay. So, if we go back all the way to the beginning of the year, we were looking at, a bottom in late March. It happened early April. And then we were looking at a possibility of a rally into mid-May. And then we were looking at really two distinct scenarios. Okay. Number one, it wasn't going to be much of a top. We would have a smaller correction, when we just grind higher. The other one is where we would see a sustained move, call it a second crash, if you will, that made new lows below that April 7th low. Okay. I don't believe that that is a possibility now. Okay. Or, we don't talk about guarantees or, zero sum game, but let's just say the probabilities that we will see new lows below those April 7th lows have drastically been reduced. Drastically. So over the weekend, we saw that the U.S. and the EU agreed to delay tariffs until July 9th or July 7th, whatever it might be. Okay. So when I saw that and we saw the market react higher, that tells me that we're not likely to see that big sharp move down. Because if you remember, late last week, it was Trump's going to hike tariffs by 50%. Everybody got scared. We were going to have another, China or another Liberation Day type of move. And, and that was rightfully so to believe that and say, all right, here we go again. This is going to escalate. But what we're seeing now and what I think the market is starting to discount, or it will discount in the future. I'm not saying that there's not going to be another trade headline, trade war, back and forth, retaliation, whatever it might be. In fact, I'm almost certain that is going to be the case. But what is going to happen, and what we've already seen, the market's already showed us that these headlines, any decline around it, it means that deal is going to get done. People are coming to the table, said, all right, let's make this deal, let's get it behind us, and then move forward. Okay. To that end, with what we've seen over the last couple of months in terms of inflation, it hasn't been as bad as the fear mongers on media have shown or wanted it to be regarding the tariffs. Okay, so if all these things are coming together, it tells me that the stock market is starting to discount any bad news. Okay, now what other news could come out? That remains to be seen. Okay, obviously we have more inflation data, the jobs data. Yesterday we saw consumer confidence come in at a 4-year high, blew away all expectations. Okay, so it's not as bad as people think it is, and the market's showing us that. Okay, it's a good combination of number one, there was a lot of fear. Okay, positioning was really bad. Tariffs aren't as bad. Inflation isn't as bad. Consumer confidence is high. Okay, what's going to happen with the Fed? Then we'll have to see. Okay, but so let's take the worst case scenario out of the picture. Okay, and now let's just focus on what is likely to happen next. And what is likely to happen next, we're going to move on from that mid-May time factor because to me, it's not again, we didn't see this, huge 2, 3, 4 day move down or even 2 week move down, where it's just this crash like move. So the next time factors that I have here start around June 10th, again, plus or minus a few days, okay, and then the last week of June. To me, this is very important, okay? You can see here, I just have this simple trend line up from these lows. I have the 200-day moving average here in red is holding, the 55-day moving average, the prices are well above it. So does this become a choppy move where, we see something along the lines of just working off, because you can see down at the bottom, this is overbought a little bit, okay? So, is it something where we, let me do that again, where we do something like this, okay? And it's not terribly volatile, but it just happens to be something where bulls don't win, bears don't win, but what we do is we work off these overbought levels, we don't break any support levels, okay, and then we simply rally. That's the most likely scenario that I see, okay? So as I told 10 Stock Trader subscribers yesterday, when the market opened back up after the Monday holiday, I started buying again. Now, we have a hedge on in a volatility in the VIX, UVXY, okay? If we get a situation like this, we can close that out, and then I'm going to look to get aggressive. Then I'm going to look to add to our ETF positions. It's as simple as that for me. Now, let's say in the odd case, I mentioned it earlier, I don't see the probabilities as high that we get this, big drop. Well, Greg, what if you're wrong? Great. Give it to me. Let me have it, because I would buy that with probably the most aggressive trading that I've had since the low in 2020 or the low in 2022. I believe it would be that good. Okay. And usually when you wait for something, how many people in and around here are saying, I don't think this is the low yet. I think we're going to have to keep trading lower. You wait, you put it in a limit order, it never hits, and then you miss the move. Okay. Now, a lot of people miss the moves. My point is that oftentimes when you want something to happen in the market, it doesn't. Okay. So that's why I like to go over these different scenarios to say, hey, look, these are the probabilities. And so what I'm seeing now based upon, what happened over the last week is, this is the most likely scenario that I see. Not terribly volatile, but it gives us an opportunity to buy weakness. All right. That's the overall broader market with the S&P 500. Let's look at NVIDIA. All right. They report earnings today. Obviously a very important stock. Okay. You can see over the last, year or something or so, it hasn't done much. It's obviously, had an incredible rally. It's number one AI chip stock. All that stuff. All right. But let's look at the setups. So we report here today. It hasn't made a new high above last week's high. Okay, you can kind of see how I have this labeled as a wave 1 up, a wave 2. And again, because of what happened over the weekend and yesterday, okay, this to me has all the characteristics, of a wave 3. Now, it can be this grinding wave 3 where it's, we've already had the explosive move out here in mid-May or at the beginning of May. Okay, so you can see here it's starting to diverge. Maybe NVIDIA has good earnings. We pop up, okay? Maybe it rallies all the way into next week. Around this June 10th date is when we start to pull back. We get a pullback into the end of June. And then you can see here I have this wave 3 all the way out into August, maybe even September. That's a great thing to trade. Not as crazy volatile, but again, this tells me that, this is the most bullish setup. So that's what I'm looking at in terms of NVIDIA, okay? With NVIDIA, I'm also going to be tracking advanced micro devices. And this is something that I highlighted to, we've covered it on the show. And then I highlighted one of the bullish setups to 10 Stock Trader subscribers yesterday. And essentially what I'm looking at here is, or what I was looking at, if we go back to March of 2024, is that this entire move, could have resulted in a final low into around these June dates. Again, that was going back into, going back to last week, 50% tariffs. We have this sell-off. Here's the mid-May high, right? May 14th, May 15th, whatever it was. And it's, it changes depending on what stock you're looking at or market. But you can see here this marked a high, and then we drop. That would have been a huge buying opportunity. Huge. Okay, let's say I'm right and we don't get that. You can see here what I have in black, okay? Again, let's say NVIDIA leads a rising tide, lifts all boats. And that's what we see with NVIDIA it rallies up, we get a correction, okay? It breaks above this downtrend that we've had in place for, let's call it a year, okay? Holds support, and then we get that similar rally I outlined in NVIDIA, into August and September. Great trading setup. Great trading setup, okay? Another one I want to focus on is Tesla. A lot of questions around that. And so we looked over the last, let's call it the last 3 or 4 weeks, how April and May tends to have a rally in store for Tesla. Okay, now what I was looking at here was a potential for, because I was looking at this resistance in Tesla coming out from a big drop, okay? And you can see here, I was like, okay, well maybe this has the potential to drop down into another low. That was something I was going to buy. Well, that didn't happen. So what do we have now? We have this new uptrend in place. Now, you might look at the RSI and say, man, this is a little overbought, and it is. I get that. But let's go back to here. Okay, let's go back last year, and you can see, and I'll zoom in on this so it's easier to see just last year. So you can see how we have this bottom, and then Tesla tends to do this. It'll rally, it'll work off just a few days, but look at how it gets into this overbought territory in the RSI. Let me zoom in. And then it stays there, okay? I mean, Tesla went from 293 all the way up to 480 in just a matter of months, and it stayed within an overbought RSI, okay? That it tends to happen when we have a strong rally. So I'm looking at this Tesla chart, and it might not even be something where we wait for the pullback, because we could get a situation like this where it stays in overbought territory and we continue to rally. All right. So 3 important text charts there: NVIDIA, AMD, and Tesla. And the last thing I want to cover before I take some questions is gold. So how does gold and S&P correlate? We talked about bonds. I'll get into bonds probably next week. Okay, I want to see a little bit more price action there. There's something happened in Japan. Their bond market's kind of blowing up. So is that reverberating through our market? Is it inflation? Is it tariffs? What's the Fed going to do? There's a lot of catalysts, a lot of questions there. But I want to focus on gold and the S&P first. Okay, so on April 22nd, you can see that that gold topped. Okay. Now, if you remember, we can go back to the S&P 500. That's where S&P 500 made its higher low, okay, off of this, April 7th low, okay? So stocks bottom and rally, gold tops and declines. Now, you can see that gold has, kind of been in this choppy range, okay? So there's really 2 things to think about, maybe 3. Number 1, gold doesn't care what the S&P 500 does, okay? We're seeing the spending package in Washington, D.C. that's going to add to the deficit. Gold that causes the uncertainty. People want to buy it. The debt becomes an issue. You're going to want to own gold as a hedge against uncertainty in government policy. Totally get it. Totally understandable. Okay, great. So if that is the case, then what we would have to see here is that gold holds, let's say it pulls back a little bit, gold's going to have to hold this support, and then rally. The other thing to think about, how is it going to play into with what happens with these June time factors? To me, that's going to be the biggest thing to watch, going forward in the S&P. We might see a little bit more choppiness, might see that in the S&P as well, okay? But how do both gold and the S&P react into these time factor dates? That's going to set the next stage. Now, with this overlapping pattern, if we ideally is we would get something along the lines of, it holds support and then breaks out above this small downtrend, okay? So we're making a series of lower highs, all right? For this to continue, you would want to see those lower highs break with a breakout above that trend line, okay? And this would actually be quite a bullish move, all right? Probably towards, the 4,000 area minimum, all right? Now, what would be the problem is if we have a situation where it drops and then we get another lower high, and then it really starts to break support. I'm not saying that the entire, move is over, But from a trading perspective, it's like, okay, maybe we've got to sit back and see how this plays out. Again, this is likely to be a factor or something that we need to watch heading into these June dates. So the way I look at it is really, really exciting. Okay, I think for the most part we can look past that worst case scenario. Okay, and now we get to focus on this uptrend in stocks, how the S&P and others started with Nvidia later today and tomorrow, and then how these things play out into these June time factors. So regardless of what happens, I'm excited. I think we're going to have some tremendous trading opportunities, and then we'll look at gold and see how that correlates. And then, heading into the summer months, we'll see how bonds start to react. Okay. So that's what I have for you this week. I'm happy to take any questions. What do I think about SOFI? Let's take a look. Sophie Technologies. Yeah, this has a very similar feel to what's going to happen in the market. Okay, you can see here it bottomed on April 7th. I like how it rallied again. Similar to AMD, this topped on May 14th. Okay, so if we can, hold, you can see here the 55-day and 200-day moving averages. Prices are holding above that, so I think this is a strong correlation with the rest of the market. Okay, if we can hold support, if we get into these June dates and it's we might get you can see here how the composite index at the bottom has dropped, but it's starting to slope up. If we see divergence here between the RSI and composite index, probably a good setup here to buy weakness in this stock. Your take on Avago, or excuse me, Broadcom. This is a strong stock as well, and you can actually see this is somewhat outperforming Nvidia as it's close to near all-time highs. Okay, how does Nvidia earnings later today affect this stock? Again, I kind of mentioned it with AMD. Does it if demand from the top chip maker AMD or Nvidia is strong, does that rising tide lift all boats? What kind of you never know. It's always risky. Trading into earnings, especially with such an important stock like Nvidia. But this is very similar to what we're looking at in terms of a strong stock, strong market. You can see here, just looking at this very, very quickly, you can see here this is a positive reversal on the composite index. Okay, just real quick, I'll point this out. So these 2 points are making a lower low. Same 2 points on price are making higher, or sloping up versus sloping down. This tells me that there's more upside. Okay, something to think about. Thoughts on EL? Estee Lauder. Something I've never bought, both the product or the stock. But you can see here that this has been, this looks like inflation just completely killed the stock. There's a lot of stocks like that look like this. Okay, so this topped with the market and and bonds in January of 2022, hasn't recovered since. This kind of reminds me when you see something that's been in a protracted downtrend for so long, over a year, 2 years, while the rest of the market is moving up. This kind of goes back to something Paul Tudor Jones said, is like within this market environment where other stocks are above their 200-day moving average, this is something where he would not touch it unless it started to trade above its 200-day moving average. Probably something to think about. Palantir sold off on a huge up day. Thoughts on it? Let's see. This is a popular stock. A lot of people talk about it. Sold off yesterday on a huge up day. So I don't know. To me, this has, it's obviously a momentum stock that has clearly taken off. Okay, it's in the defense contractor business, it's in AI, it's in the tech space as well. A lot of analysts will say it's obviously competing with Lockheed and some others. Okay, but it's well ahead of the game. Okay, if that's the case, it sure looks like it just by looking at the stock and not listening to any of the critics or pundits on TV or in financial media or wherever. Okay, now this has obviously just made new all-time highs. It's leading the market or leading other stocks. Okay, right off the gate. I think I outlined this last week. I can, again, just visually looking at this very, very quickly, I can see a five-wave move. Okay, but this is a corrective move that could just do something like this into those June dates, and then we're off running again. I would look here at the RSI, especially within a strong trending market, and look to see if we get any reversals, as well as if it keeps up with the rest of the indices, the major, S&P 500 or Nasdaq. Can you look at Rocket Lab, RKLB? So, once again, keeping up with the rest of the market, bottomed on April 7th. Okay. This looks pretty good. Rocket Lab is appropriate given some of these moves. Pretty sharp moves. We have, look how this April 7th filled the gap here from, when was that? Back in November. Okay. I don't know if that was, I guess it was it looks maybe possibly earnings. Looks like it had good earnings, pulled back with the rest of the market, filled the gap. We're rallying again above both moving averages. A little overbought, a little bit of divergence here on the composite index. Again, maybe this is something just like the rest of the market, just like everything we outlined today. We get some choppiness, heading into these time factors in June. Okay, hold support, then we rally back up again. What do you think about nuclear stocks like SMR? Renewed support from the government seems like it should help push them higher. Let's take a look. That's a good thesis, and you're not alone in this thinking, because here we have this is popping higher, new all-time highs, and this is where you always want to go back in history. So you can see here it popped here back in 2024. RSI reached 93, which is very, very high. Not there yet, but getting close. So I would just keep, if you're long, great. I can't tell you obviously what to do, but you're approaching historic overbought levels. So again, similar to the rest of the market, maybe perhaps we get a pullback, find some support, and then it keeps rallying again. But if you have that major thesis, like you said, with government backing it, funds start flowing to it, it's hard to fade this type of move. AutoZone. This is something where a lot of people thought the tariffs were going to affect everything, inflation, you name it. And look, it's just been in a steady uptrend, holding above its 200-day moving average, holding above its 55 day for the most part. Okay, this is just stock. The average true range isn't crazy. I mean, look, it's a 37. I mean, it's an expensive stock. Okay. So if you own it, great. It doesn't look like a stock that you'd want to sell anytime soon, unless something fundamentally changes, with the auto industry. Okay. Can we look at TPL? Sure. Is there a divergence? Texas Pacific. Is there a divergence? Well, I guess the question is diverging from what? Initially, it's diverging from the major indices. Okay, this topped here in November. It's had this sideways move. It is holding above the 200-day moving average. Now, what would be key here, again, just looking at this very, very quickly, is does the RSI get down into oversold levels while holding above support, whether that be the 200-day moving average, whether that be above, this April 7th low. That would be the big thing that I would look for in terms of, an entry point, at least, and managing your risk. But yes, there is divergence between this and the market. Not so much divergence yet on the indice or on the indicators, because it's kind of been in this sideways move for so long. How do you size positions when multiple bullish charts fire at once? Equal weight, tiered, or something else? That's a great question, and the question isn't, there's multiple answers to it, and what it really depends on. So everything happening at once, okay? What you have to do, and this is something that my mind goes, in so many different places all day, every day. I'm constantly thinking about exactly this question, okay? What are the catalysts that are coming up? What are the scenarios that are coming up? Do I want to trade an ETF? Do I want to buy a stock, or do I want to trade options? Okay. All of those factor into my decision making every single day because I'm trying to figure out what those positions are going to be, based upon are you on a winning streak? Are on a losing streak? Okay. How much are you actually trading? What's your portfolio look like? Okay. Have you already risked a lot and you have, let's say you're up 20%, whatever it is. Do you want to risk more or do you want to risk less? What's your level of confidence in that strategy? So there's a lot of different factors that are going to tell me, how am I going to size my positions based upon what's happening. But when we see these bullish setups happen, let's go back to to lows into April, and I was trading cat calls and IWM calls, and those are quick fire trades based upon the volatility we're seeing. Now that we're seeing this kind of, we've had this rally, okay, we took some profit, we saw what happened over the weekend. Now we're jumping back in some of the ETFs. I don't want to get, too aggressive with both position sizing and the number of trades, okay, heading into what I believe will be the next important time factors in June. So all these, there's no easy answer to that. It all depends on a lot of different things, but the fact you should be thinking about it in terms of managing your risk. Why do you track the 55-day and not the 50 or the 20? The 55-day is something that I've always tracked. Certain stocks or certain markets will track differently. Back in my foreign exchange days, it was kind of one of those things that's what everybody did, so you did it, and you would see a lot of movement around it. Same thing with the 200-day moving average. You can look at, some of it's Fibonacci numbers. You can look at a 21-day moving average. It doesn't really matter whether you're looking at the number, okay? If you think about, what market you're looking at and you want to use a different moving average and you find that market tends to follow this moving average better than the 55-day, go for it, right? So you can look at 5-day moving average versus the 21-day. You can have that, a crossover. Moving average is more long-term for me. And I look at it because I know that there are funds out there, big funds, that will trigger buy or sell signals depending on what's happening. It might just be short term. And again, 10 stock traders have heard me say this a zillion times. You can't just use one strategy or one indicator or one chart or one moving average or two moving averages to determine what you're going to do. Okay? You have to have various tools in your toolbox to be able to use it successfully. So if you use the 21-day moving average or you use the 50 and 20 better than the 55 and the 200, then use that. For me, this is just a personal preference that I've noticed as the 55-day using the standard is usually 50. So I wanted to change it up a little bit and use the 55-day. And again, going back to some of my foreign exchange days, a lot of traders use that as well. Okay. So that's it for this week. We'll see how Nvidia plays out with earnings. We're gonna be looking at that setup that I outlined in on those tech stocks as well as the S&P 500. Okay, and then how gold correlates, and then we'll focus on bonds as well. And before I wrap up, just please remember next week we're going to be at 8:45 in the morning. Thank you, and we'll see you next week.